guys, this is your own channel named Rajasthan Commerce Youth with a different vision of enlightenment. A watching place for preparing people to solve practical questions. Today I am back with another video for this series for the chapter called royalty count. Okay, and this is going to be the fifth video for this series and of the chapter royalty account, in which I have already mentioned that this chapter called royalty account contains several and different topics which I have already described. Like I have already prepared or make video for these four, okay, separate videos, separate four videos for the separate topic in order to teach you, in order to perceive you. So in my first video you're gonna see the practical questions without strike here, in the second one practical question with striking, in the third one opening a minimum rent account, and fourth one sublease. So if you still haven't watched that video so far, so please go and check out first so that you can understand and perceive the concept of royalty chapter with the different topics. So today I'm going to take this topic. Today I'm going to starting with this a new topic which is known as patent royalties, and I have already mentioned that these terms, okay, the meaning of these terms and how does it really work, okay, how does it play a vital role in this chapter called royalty accounts, and also describe the concept of royalty lessee and lessor by making this stuff. Okay, so let's jump into the next topic. So this is the topic for this video, is called patent royalties. Okay, first of all let's understand a bit regarding the patent royalties. Okay, like I already mentioned here for your convenience, like the landlord person holding the patent right can also sell out its right or allowed to use its right in the people in the place of royalty amount. Okay, so in the return of granting right to the right of the patent to the third party person, the owner has right to get royalty account, okay, royalty amount on the basis of the production or sales of the particular product for which he got right. Okay, so moving on, here the owner of the patent is known as patenter, and the person or buyer who takes over the right is also known as patentee. So I have already simply described here in my own words that what's the exactly mean of patent. Okay, it's like nothing but just an amount paid by the patentee to the patenter. Okay, like we have already done such kind of questions regarding this kind of concept, okay, in my previous video, so that would be helpful to you. Now moving on, the accounting in case of patent royalty. Okay, what kind of accounting treatment we have to do while preparing patentee royalties account, okay, while preparing royalty accounts in case of patent royalties. So here you can see I have already mentioned here, like accounting process will be adopted as similar as in case of preparing accounts in the books of lessee and lessor. Okay, we just have to do all we need to, all we used to do earlier, okay, or we used to do earlier in case of working, in case of working by solving practical question regarding the topic first, okay, regarding the topic second, third, and in the case of sublease. Okay, it's so similar, the all topics are similar, okay, as per the accounting process. Okay, so let's moving on the question. Okay, let's get our hands on the question. So here is our question regarding the patent royalty. Okay, so Kailash required a license. Kailash acquired a license to manufacture and sell color television from the Girish and company on the following terms and condition. Okay, on some following terms and condition. As usual, it is there. Okay, while the contract. So that moving on the first terms and condition, that is license will be commenced from 1st January 2014. Okay, it means license will be in work on 1st of January 2014, and second one is royalty was to be paid 25 for each television manufactured subject to the minimum rent of 5,000 for the first year. Okay, 5,000 for the first year, increasing by 2,000 every year till 20,000 per annum is reached. It means minimum rent would be payable, okay, for the first year of rupees 5,000. Okay, and in the next year, in just the next year it will be increased by 2,000. Okay, and you have to pay minimum rent year to year, 1 year to another year, by adding 2,000 by 2,000 till it is reached 20,000 per annum. Okay, you just have to keep on adding 2,000, okay, of in 5,000. Okay, in 5,000. Now the third point says that it is status that short working of any year may be recouped out of the surplus of following 2 years. Okay, short working amount can be recouped out of the subsequent 2 years excess working amount. Okay, so the output during the 5 years was as follow. Year is mentioned here: 2015, 16, 17, 18, and 19, and production has been occurred in the factory you can see here 160, okay, 340, 480, 600 and 1000. And eventually, here you can see it is mentioned here that while preparing the accounts for the first year on 31st December, Kailash decided to not carry forward an asset any short working. You just have to keep in your mind this line, like I'm going to read it again for you. Like, while preparing the accounts for the first year on 31st December, Kailash decided not to carry forward any short working. Okay, I'll tell you later while solving the question what is really exactly mean. Okay, like, and in the second year 3500 was carried forward, in the third year 1500, and prepare the necessary ledgers accounts in the books of Kailash. Okay, so this is our question. Okay, now moving on the answer. Here is our answer. Okay, starting it with preparing analytical table, just in purpose to figure out the deficiency and accessory amount, okay, and recoupment and unrecoupable amount, as well as the amount payable directly to the lessor. Okay, and that's why we are preparing the analytical table. Okay, that is the only purpose behind preparing the analytical table. So same thing, year column, actual royalty column, minimum rent, short working, like deficiency, accessory working amount, payable, and these two terms, okay, like P&L debit and credit thing, is a bit different. Okay, like earlier. So I'll tell you later what's the meaning of it. First of all, year, write down all the years like 14, 15, 16, 17, 18, 19, for which year we need to prepare analytical table. So here you can also see, like, I want to tell you that in this line it was mentioned here clearly that license will be commenced from 1st January 2014. Okay, and the production was started in the year of 2015. Okay, but license was commenced in the year of 2014. Okay, so we will count down the year from 2014, okay, till 2019. So here you can see I did similar from 2014 to till 2019. So in the year of 2014, as you can see here there were not any kind of production amount, okay, given. There has been no production, okay, occurred. So as you can see, if we need to figure out the actual royalty amount, okay, which only can be calculated by multiplying the rate of royalty with the production amount. Okay, whatever the production amount would be there, just simply you have to multiply it with the rate of royalty and you will get your actual royalty amount. But as you can see, in the year of 2014 there were no production amount, just because of the license was allowed to the patentee in the year. Okay, so how could he even start production in the similar year? Okay, just because of there were no license, it means no authority to work. Okay, no authority to production. So there were nil production. Okay, and rate of production was also nil. So if you multiply with 0, so you can see here nil. Okay, but minimum rent will be there. Okay, just because of license has been commenced in the year of 2014 by the patenter, but he couldn't start work in the year of 2014, so he has to pay minimum rent amount to the patenter as per the agreement has been signed by the lessee and lessor, okay, by the both parties. So here you can see minimum rent amount, a line is mentioned here that subject to a minimum rent of 5,000 for the first year, increasing by 2,000 every year till 20,000 per annum is reached. Now what's the meaning of that? You just simply have to start, okay, minimum rent amount with 5,000. Okay, and after the first year you just have to add on 2,000 year to year, while calculating minimum rent amount with the 5,000 in the 5,000 till it's reached 20,000. So here we're gonna do similar thing. Here you can see it's nil, actual royalty money is nil, and the minimum rent amount is 5,000. So which is greater here? Okay, like minimum rent is greater just because of actual royalty amount is nil, totally nil. And here you can see easily the minimum rent amount is greater than the actual royalty amount. So there you're gonna see deficiency amount. Okay, deficiency amount just because of the whole amount is payable by the patentee to the patenter, okay, from his own pocket. So this will be considered as a loss for the patentee. So that would be write down in the bracket, okay, which indicates the loss amount, okay, the deficiency amount of the short working. Here you can see again in the year of 2015 there were a production of 160. So you simply have to multiply 160 multiply with rate of royalty, which was 25. So if you multiply with 160 to 25, you just simply have to multiply with 160 production with rate of royalty in the year of 340 with the rate of royalty 70 480 in the rate of royalty and 18600 with the rate of royalty, and in the end eventually 1000 production multiplied with 25,000. So here you can see what we got in the first year after multiplying 4,000, in the second year after multiplying 8,500, in this year of 17 12,000, in the year of 18 15,000 actual royalty amount, in the 19 till the end 19 25,000 actual royalty amount. And here you can see 5,000 was there in the first year, okay, and it was mentioned in the question that you have to add 20,000, okay, you have to add, sorry, 2,000 in the first year's amount of minimum rent, okay, and have to pay him by adding 2,000, okay, in 5,000. So here you can see 5,000 plus 2,000 in the next year, 5,000 plus 2,000 7,000 amount, okay, and 7,000 plus 2,000 9,000 amount, 9,000 plus 2,000 11,000 amount, 11,000 plus 2,000 13,000, and 30,000 plus 2,000 50,000. And it was mentioned till the end, in the end of the line, as you can see, that 2,000 every year till 20,000 per annum is reached, okay. Here you can see it's only reached 15,000, okay. So if there were any rest of year given, so we will again add 2,000 and then 2,000 2,000 till 20,000 is reached, okay. So here you can see only 50,000 amount of minimum rent in the year of 2019. So you just simply have to find out the deficiency amount, and I already mentioned in my previous video as well that how to figure out the deficiency amount, the excess working deficiency amount, okay. So again I'm telling you, you just simply have to figure out the difference between the minimum rent and the actual royalty, okay. If minimum rent is greater than the actual royalty, you will see the deficiency amount. If actual royalty is greater than the minimum rent, then you're gonna see excess working amount. So here you can see minimum rent is greater than the actual royalty amount by 3,000, so it will be considered as short working, okay. So in the year of 2016, here you can see minimum rent is again greater than the actual royalty amount. Here again 500 rupees of short working will be plotted in the column of short working, okay, as deficiency amount. In the year of 2070, here you can see actual royalty amount is greater than the minimum rent amount by 1,000 rupees, which indicates an amount of 1,000 rupees as excess working, okay. And in the year of 2018, here you can see again actual royalty amount is greater than the minimum rent amount, which indicates 2,000 minimum 2,000 amount of excess working. In the year of 2019, as you can see, the 25,000 amount as actual royalty, the use amount, okay, the use amount greater than the minimum rent account, which is only 15,000, okay. It means the difference, whatever the difference is there by 10,000 rupees, of 10,000 rupees will be known as excess working amount. So simply you just here figure out the excess working or deficiency amount, okay. Now recoupment amount, recruitment column, I already mentioned was the meaning of recoupment, okay. You just simply have to recoup the short working amount as per the terms and condition is mentioned in the question, okay, regarding the recoupment, okay, like 2 years 3 years. I already mentioned in my previous video how to figure out the recoupment, okay. So now what is this two column, okay, that similar a bit different than earlier. So let me tell you that, see, it affects the last line mentioned here that while preparing the accounts of first year on 31st December, okay, just forget about this date, it like nothing, okay, simply consider this line, okay. Here Kailash decided not to carry forward an asset any short working, okay, and I said any short working in the first year, okay. In the first year, here you can see while preparing the first year on 31st December. In the second year, 3,500 was carried forward by the Kailash, by the patentee. In the third year, 1,500. So what is really mean, okay, by this, okay, by carry forwarding such thing? Like I already mentioned earlier in my question that what you can do with your short working amount, okay, if any short working amount occurs, what you simply have to do, as per the terms and condition regarding recoupment, okay, you will carry forward the short working amount, okay, by 1 year to another year, okay, 1 year to another year you will carry forward as per the terms and condition of short working. Like here you can see in the first year, here you can see regarding the short recoupment terms and condition mentioned here that short working of any year may be recouped out of the surplus of following 2 years, okay. It means short working amount like this, short working means negative amount, the loss can be recouped out of the excess working this, like this amount, okay, whatever amount is above than the actual royalty, okay, then the minimum rent. Here you can see 1,000 above, the difference between the 12,000 and 11,000, 1,000. So this amount, which is known as excess working, okay, as profit generated by the patentee in the different year, and the negative amount in the different year, so this amount can be recouped out of the excess working amount, okay. And the recoupment terms and condition is also mentioned in the question, okay. as per the agreement, the patentee, okay, the patentee has right to recoup its negative or loss amount or short working deficiency amount out of the subsequent 2 years excess working amount. So here you can see this amount occurred in the year of 2014, okay, which can be recouped out of the excess working amount, okay, excess working amount out of the subsequent 2 years excess working amount in the year of 2015's excess working amount if occurs any, okay, and out of the excess working amount if generates in the year of 2016. So here you can see in the year of 2015 and in the year of 2016 there were short working amount, okay, as well, so cannot be recouped. But as you can see in the question, it was mentioned here that the patentee doesn't want, here you can see in the first year the patentee doesn't want to carry forward the royalty amount as an asset, okay, as an asset, doesn't want to carry forward in the next year. So you just simply have to debit it into the P&L account, okay, as we usually do, okay, like simply we have to carry forward one by 1 year to another year, okay, and as the terms and condition as ends, okay, on terminates, we just simply have to consider that amount which is known as unrecoupable amount and just simply have to transfer it into the P&L account. We charge that amount with the P&L account, okay, considering that as our loss, okay, as our loss, and we simply pass an entry like royalty account debit, P&L account debit to the P&L account debit to the short working amount, okay. So simply that that we have to do here the same thing, like the patentee doesn't want to carry forward that short working amount, okay, in the next year as per the terms and conditions regarding the recoupment. It doesn't want to recoup, okay, that amount. It just um, he just wants to consider that amount as a loss, okay. So simply have to debit that in the P&L account, okay. If you debit that into P&L account, it means like on the left hand side of the P&L, that what would be considered you that amount as a loss, okay. You will consider that amount of short working as a loss just because of debiting it, okay, debit that amount on the left hand side of the P&L account, okay. On the left hand side all those losses are recorded, and on the right hand side all those incomes are recorded in the P&L account, you know, okay. So he doesn't want to get forward, so simply you just have to debit that amount, okay. Now whatever amount is payable, the whole amount, here you can see nil, here actual royalty amount is nil, so the whole amount will be payable to the lesser, the whole amount like 5,000. Now moving to the next year, in the year of 2015, as you can see here, short working amount of 3,000 occurred, okay. Short working amount of 3,000 occurred, which can be recouped out of the subsequent 2 years short working amount, subsequent 2 years extra working amount as per the terms and condition mentioned in the question. So here you can see in the 16, in the 17, in the 16, in the year of 16 there wasn't any extra working amount, okay, not even for a single penny. The whole amount if incurred that was of related to the short working. But in the year of 2017, here you can see extra working amount incurred of rupees 1,000, okay, which is not sufficient to recoup the full amount of short working of 3,000. But as you can see here, the lessee here here the lessee wants to carry forward 3,500, okay, in the third year, 3,500 in the third year. So this is only 3,000, so you need to get more 500 rupees, you need to get more 500 rupees to move to carry forward 3,500, 3,000 plus 500 to the next year as a loss. You just simply have to credit that amount, short working amount, into the P&L account so that you can get more amount which can be carry forward in the next year, okay. So you just say you have to carry more amount, okay, like 500 rupees, so 3,500, 3,500. So now here you can see only 1,000 can be recouped, okay, out of the 3,000, okay, out of the 3,500, okay, 3,500. Now moving the next, here you can see in the year of 2016 there were a short working amount incurred of rupees 500 which can be recouped out of the subsequent 2 years excess working amount. Here you can see the whole amount of excess working which incurred in the year of 2017 has been utilized to cover up 3,000 short working amount, 3,500 short working amount, okay. The whole amount has been utilized. Here you can see whole amount has been utilized. Now in the year of 2018, here you can see another short excess working amount incurred which can be utilized, okay, which can be useful or utilized to cover up the short working amount incurred in the year of 2016. So here you can see 500 has been incurred, the whole amount has been incurred. And in the year of 2016, it was mentioned in the question, that the lessee wants to carry forward only 1,500 rupees, okay, in the third year, like in the year of 2016, first year, second year, first year no carry forward, second year carry forwarding amount of rupees 3,500 rupees. So 3,500 we have taken more 500 rupees, okay, by charging it with the penal account. So but in the year of 16, in the third year, it only wants to carry forward 1500. So you just simply have to, here you can see 500, you had 500, and 2500 you have to take more 2500, like more 1500, just to charge it with the penal account in the credit account, in the credit, like on the right hand side of the penal account, so that you can get more amount, okay, which can be easily carried forward in the next year. Okay, it will be get more easier, it will be get more easier when you prepare short working amount. Okay, I'll tell you how to make it more easier. Okay, so let's complete this column, like recoupment column. Here you can see in the year of 2018 500 has been recouped, the whole amount incurred in the year of 2016 has been recouped, and in the last year, okay, eventually there were an amount of 25,000 relating to the actual royalty, okay, and minimum rent of 15,000. So actual working amount of 10,000 incurred, so the whole amount of actual royalty will be payable to the patenter. Okay, will be payable to the patenter. So this is how our analytical table, okay, has been completed. Here you can see. Now moving on to the next thing, which was mentioned in the question, we also have to prepare the ledger accounts. Okay, like here you can see, and I already mentioned you that in the ledger you only have to prepare three main accounts. Okay, three main accounts for the chapter. Like first is royalty accounts, okay, second one is short working, and the third one is lesser, which in this question, like in the patentee royalty question, lesser is patentee itself. Okay, so in the books of lesser, okay, in the books of lessee or patentee, you just have to prepare three main accounts. Okay, you just simply have to prepare three main accounts, like royalty accounts, and second one is short working, and the last one is lesser or patenter account. So here I have already mentioned in my previous video how to prepare that, so simply I'm going to show you in the quick view. Okay, I'm going to give you a quick view. So simply you can see, like here in the first entry we just simply have to, in the royalty account for the first year, you can see for the first year we just simply write down that how much amount of actual royalty is payable to the lesser, and being that royalty amount as an expense, as our expense, as patentee's expense, we just simply have to debited that amount into the penal account. Okay, consider that amount, royalty amount, as an expense, okay, on the left hand side of the penal account. And that we all had done, that we all have done in the same year, like in the year of 2015, 16, 17, 18, 19, whatever amount is payable to the lessee. I have mentioned here 12,000, 50,000 in the year of 2019. Here you can see 25,000. Here you also can see simply actual royalty 25,000. Okay, and then again in the end of the year we will consider that amount as our expense and charge that amount, charge the royalty amount with the simply P&L account. Okay, now let me tell you this, that is very important. Okay, I have already mentioned that concept of P&L, okay, debited and P&L credit here. Okay, P&L credit and debit, that will apply here. Like in the first year there were not even a single penny amount of actual royalty. Okay, the whole amount were there. Okay, the whole amount will be there, that was short working. Okay, account occurred in the year of 2014. Here you can see of 5,000 rupees. So here you can see 5,000 rupees. Okay, that is also payable to the lesser. Okay, just because of generally we used to pass entry like royalty, okay, short working to the lesser. So here you can see in the short working amount to the lesser. Okay, and simply gonna charge that amount to the penal account of 5,000 rupees, just because of in the end of the question it was mentioned, in the end of the question it was mentioned that the patentee doesn't want to get forward that amount, okay, short working amount, as an asset in the next year. So simply what he is trying to do, that he's gonna can finish that amount, okay, finish that amount considering it as an expense, okay, and putting it into the penal account, okay, on the left hand side, on the left hand side of the penal, okay, as an expense. So here you can see as an expense, and you can see accounts has been matched. In the year 2014 you can see whatever amount of short working is payable to the lesser, okay, we have just simply write down here. And here you can see in the next year, like in the year of 2015, it wanted, okay, the patentee wanted to carry forward only 3,500 rupees. Okay, so here you can see by balance CD, okay, the way of describing that how much amount of is ended, how much amount of that is the closing balance, okay, of short working account amount, okay, of 3,500. That's the amount he wanted to carry forward. And in the beginning of the year, in the year of 2016, here you can see same account at the opening, okay, 3,500, and at the closing 3,500, similar amount will be there. Here you can see charging it with the penal account just because of having very less amount. The lessee wanted to carry forward 3,500, but we had only 3,000 amount. As per the analytical table we have prepared, we have simply prepared that in the year of 2015 there were only 3,000 short working amount, and he wanted to carry forward more 500 rupees, okay, more 500 rupees. So simply that is where we from where we have managed the more 500 rupees to get forward into the next year. Here you can see into the next year 3500 rupees. Okay, now to the lesser, okay, whatever amount of short working incurred in the year of 2016. Here you can see 500 amount. So 500 amount in the year of 2016 incurred as an expense, okay, for the patentee. And here you can see by balance CD that how much amount of closing balance as short working the patentee wanted to get forward for the next year, for the upcoming year, that was 1500. So here you can see in the closing balance you just simply have to mention that amount, okay, 1500. Okay, simply have to mention that amount 1500. And here you can see in the year of 2017 and 18, in the year of 2017 and 18 you just simply have to do as you usually do, like ordinary passing, okay, journal entry and transferring into the short working amount, okay, like balance BD opening from where here, okay, the closing will be opening in the next year, okay, previous year's closing will be turned into the opening account for the next year, okay, at the beginning of the next year. So you can see 1500 in the 17th year, and whatever amount we have just charged, we have recouped, will be here will be right down here on the right hand side of the short working amount, okay, as recoupable amount. Here you can see 1000 rupees in the year of 2017 has been recouped, okay, okay, out of the excess working amount. So you can see 1000 has been recouped. So that, okay, amount has been recouped as a profit for the patentee. And whatever amount was there, okay, like difference between this opening balance and the lesser account, here you can see you just simply figure out the difference and transfer that into the next year, okay, transfer that amount into the next year as an closing and here as an opening, okay. And simply have to, here you can see 500 has been recouped again in the year of 2018, in the year of 2018. And finally you can see the account has been matched, okay, short working account has been matched 500. Okay, now moving on the next account, which is lesser account. Here you can see I have also this a bit, okay, due to having less space, not getting sufficient space, so that I have to deal it with there. So here you can see lesser account, or you could also write it down here like patenter account, okay, patenter account, just because we are solving patent royalty account, okay, patent royalty question regarding the patent royalty. So whatever amount is payable to the patenter, okay, patenter in the year 2014 5000, and short working incurred 5000. Whatever amount is payable in the year of 2015 7000, and royalty and short working amount, the both amount, like royalty and short working, just because in the first year I already mentioned there were not even a single penny incurred, okay, as actual royalty, okay. So the whole amount has been paid by the patentee from his own pocket, okay, to the patenter. So that amount became short working for the patentee, so that will be shown here, okay. And here we just simply made payment to the patenter, okay, by the patentee to the patenter. And in the year of 2017 7000, in the year of 2016, in the year of 2016 9000, in the year of 2017 11,000 plus 1000. What is 1000? I already mentioned it in my previous video, that how to transfer journal to the ledger, okay. So you just go and watch out that first, that will be, that gonna be simple for you. And here you can see 11,000 as a bank transfer to the bank, and 1000 that has been charged by the patentee as recoupable amount, recoupment amount, okay. There were 12,000 whole, 11,000 has been paid by the patentee to the patenter, and 1000 has been charged by the patentee. And in the year of 2018, here you can see to the bank 14,500, and short working only 500, okay, the amount which has been paid by the patentee to the patenter, and the amount which just simply you could say withdrawn by the patentee, okay, out of the short working amount, out of the short working amount. And in the year, in the last year, you can see the whole amount incurred as actual royalty, of rupees 25,000. The whole amount is payable to the patenter by the patentee. Here you can see 25,000, okay, to the bank by the patent to the patenter. And royalty amount, okay, royalty amount, what was that? Royalty amount, okay, which was payable to the patenter, okay, by the patentee. This is how we are done with another topic called as patentee, okay, patent royalties, okay. So I already mentioned that the meaning, that exact meaning of this patent royalty I already described here. So if you really want to see more, okay, like deeper it, you just simply have to pause this video and read out yourself, so that will be clarified for you, okay. So here you can see again an accounting treatment as well, okay, the meaning of patent royalty, accounting treatment as well, and analytical table how to prepare an analytical table by keeping in your mind that the amount of short working, okay, which is carry forward, which would be carried forward or not, okay, like what kind of amount the pattern really want to carry forward or not, okay, sort of amount. And we have just simply prepared the analytical table, okay, like this, with the new concept of P&L, debit and credit. And I already mentioned in my earlier videos and today as well how to prepare the three main account, like royalty account, okay, the amount which is payable to the lesser, and we have just simply debited that amount into the P&L account. And again, short working, okay, in the short working, the amount which is payable to the lesser, and that amount which we cannot, which patentee doesn't want to carry forward, okay, as an asset. So in the year 2014 it wanted to carry forward only 3500. Due to having less amount, we have again managed more 500 rupees out of the P&L account. In the year 2016, here you can see 1500 he wanted to get forward, but we had so much, so that we just simply have to get debited the rest of amount, okay, above 1500 amount into the P&L account by debited short working amount into the P&L account, like P&L account debit to the short working, like this, okay. And in the year of 2017, okay, beginning of the amount for the account of 2000, for the account of short working, okay, here again opening amount, and here you can see closing amount similar, and here you can see closing amount 500. And in the year of 2018 the amount has been matched 500 500. Lesser account what we have paid, okay, whatever amount has been recouped as short working reserve, okay, reserve account. And here simply whatever amount, the whole amount of actual royalty we have paid as actual royalty, okay, as payable amount to the patenter. So this is how we have done all these things, okay. So here we are done again with this another topic for the chapter called royalty account. That is the topic we just done. Till then, if you really like my videos, please subscribe my channel and share my videos, and also like my videos, okay. And if you haven't watched the previous four parts for the video series for this chapter called royalty account, if you haven't watched that videos so far, so please go and watch out that, okay, so that it can be more easier for you to solve out all the practical questions regarding the royalty accounts. So till the upcoming videos, stay safe, stay healthy. Thank you very much.